Welcome everyone. This is Glenn Downing, registered investment advisor and certified financial planner of CameronDowning, a registered investment advisory firm here in beautiful Miami, Florida. The topic of today's video is the Florida Retirement System Investment Option. As a general rule, employer-sponsored retirement plans can be categorized in two ways. You've got the defined contribution plan, or the DC, or the defined benefit plan, or the DB plan. As their names suggest, the salient feature of the defined contribution plan is the amount that can go into the plan in terms of contributions. The defined benefit plan, on the other hand, is also known as a pension plan. There is a pension formula, and usually based on your years of service with your employer and your average or final compensation. And the formula calculates a pension amount, which is guaranteed over the pensioner's lifetime or perhaps over the joint lifetimes of the pensioner plus spouse. But in this video, I'll talk specifically about the FRS defined contribution plan. Limits to contributions are defined by ERISA statutes. That is, ERISA, the Employee Retirement Income Security Act of 1974. And that legislation governs much of what goes on in the retirement account world. Under ERISA rules, the maximum amount that can go into an individual's defined contribution account is 100% of pay, up to a maximum of $53,000 per year from all sources. That is, from your deferrals and your employer's contributions. You, as an employee, may defer 100% of your salary before tax into your defined contribution plan up to $18,000 per year. Given the $53,000 limit, that means that the maximum your employer can contribute to your account in any given year is $35,000. This amount can come from a matching formula or from discretionary contributions. If you are age 50 or over, you have an additional $6,000 catch-up contribution available, taking you to a $24,000 maximum. The interesting thing here is that the $6,000 catch-up is the only circumstance where the total contribution can exceed the $53,000 max. If you are in the FRS investment plan, you have a mandatory automatic 3% of pay contribution, which is matched at 3.3% by your employer. The Florida legislature can raise or lower this amount as it sees fit. You are vested in your benefit after only 1 year, meaning that if you leave your FRS employer, you take the entire account with you, both your deferrals and the employer match portion. How do you invest your money? With FRS, you have a small selection of mutual fund sub-accounts from which to choose. And I say small selection because it really is small. You have 3 U.S. equity funds, 3 bond funds, 3 international funds. There are additionally a number of target date funds. These target your retirement date and become progressively more conservatively invested automatically as that date draws near. An alternative is a self-directed brokerage account. Here you can open up a separate account, a brokerage window, and choose from many options: mutual funds, ETFs, individual stocks, and bonds. This is meant for the experienced investor who knows what he's doing. The brokerage window can be opened with a minimum $5,000 investment, and then subsequent transfers in must be $1,000 or more. You open the account online and initiate the transfer to a money market-like fund. Once there in that money market, you allocate the funds as you see fit. To redeem money from the brokerage account, the process works backwards. Close the investment positions, transfer the funds back into the money market account, and then move it from the brokerage account back into the main FRS account. From a risk point of view, all the investment risk here in a defined contribution plan is with the participant, in that the DC plan offers no fixed retirement income. Whatever you've saved and earned is what you have for your retirement. You will have an option to purchase a commercial annuity at retirement, however, and that will offer you a payment that rises at 3% per year. It is certainly a choice that you should evaluate carefully at that time. A further point about the FRS system is that each participant can make a one-time election to switch to the other plan, that is, from the defined contribution to the defined benefit, or the other way around. Here's a circumstance where this might be useful to you. Just say, for example, you started teaching right out of college. You thought you would be teaching for a good long time, stay with the school system for your whole career. But after a few years, you realize that you'd like to only work a few more years and then perhaps, say, remain home to raise your children. Well, once you change, you might want to change at that point from the pension option to the investment option to have a potentially higher balance to transfer out. What do you do with your money at retirement? Well, that depends, and our advice is, of course, to work with us to make wise decisions. Decisions which are fully in your best interest. It pains us to hear of so many FRS employees who've taken unsuitable advice and been shoved into annuities. Our work is always custom and focuses on the individual needs of the client. As registered investment advisors, we have no product to sell you. We're not pushing to make a sale so we can generate a commission. Not that there's anything wrong with selling on commission. But as certified financial planners as well, you can count on us for a fiduciary standard of care, meaning unbiased financial advice, always in the client's best interests. We hope you'll email us at info@CameronDowning.com with your questions. Do connect with us on LinkedIn and follow us on Twitter and Facebook. Visit us online at CameronDowning.com, where you can make an appointment to come talk things over with us that suits your schedule. Once again, this has been Glenn Downing presenting, and I hope to meet you in person sometime soon.